What's up, traders? What's going on? Yo, yo. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. I added a new short in RGTI. Rigetti spaghetti. All right. Actually want to start with Steamboat Willie's comment here, but let's do a quick review of the numbers. So the SPYs are down 0.3% or so. So the close is actually a little bit worse than 0.3%, but whatever. 0.3% in the SPYs. Q's off 0.5% on the day about the IWM. Basically a full percentage point on the day. So Russell, a little more volatility there, a little more weakness there. The TLT was green. The dollar, this dollar you gotta start taking note of. The UPTF closing on highs, accelerating up. That's really worth taking note of. Gold continuing again up 0.5%, yet Bitcoin was down almost 3%. I mean, it went parabolic, so it's not even a pullback to the 80 MA on the daily. Ethereum's off 5%. A lot of volatility in these cryptocurrencies. Solana off 5%. So sometimes crypto's been kind of leading the way. It led the way on the initial pullback, led the way on the bounce. Now it's down again today. But yeah, basically, want to just start with the comment that Steamboat Willie here just said right as we're about to start the meeting, where he said, "I wouldn't be shocked to see a gap up to start the AM tomorrow." I wouldn't be shocked to see a gap up start tomorrow either, because that's what happens literally every day. First of all, last night, it was a rule for me a long time ago to not look at the futures before bed, and I have been totally and utterly failing on that for this entire calendar year. Ever since the whole April fiasco, I can't help myself but to fairly regularly, what I stop myself from doing it is checking every 10 minutes. But been checking the futures, pretty much every night. And last night, I go to bed pretty early. We were down. Nothing crazy, 0.18% or something like that. And obviously, being down that little with the futures, you could easily be positive by the next day. You could also be down even more by the next morning. But just seeing any negative futures at all was like, oh my gosh, red futures? Could this turn into something? And then, by the time I woke up, the market was flat. And then by the time I was doing the morning meeting, the market was green, and we ended up having another gap up this morning. And this morning's gap up actually made me a little nervous. The last couple gap ups we've had in the market, like particularly yesterday's, I had a lot of conviction on the opening short off of the gap up yesterday. Not necessarily conviction that it would turn into anything more than just a technical retracement of the upside extension on the small time frame yesterday, but that at least in the beginning of the day, that was going to be something you could sell, and it was. Today, I had less conviction on that because it wasn't like we were having this big, just gap up across the board necessarily. It was that we went from red to green in the futures, and I don't know. I was kind of getting a little bit nervous with the VIX also seeming like it was really failing at 17 yesterday and being weak again this morning. I was getting nervous that the market actually was going to start to really break out to the upside and pump to the upside. We even noted in the daily chart this morning. Now the picture's pretty different, but when we were gapping to new all-time highs again this morning, it was like, man, the one thing about this market, we said in the morning meeting, is that while September was just the strongest September in 15 years and October's been off to a bang, we've never gotten any extreme extension in this market. As a matter of fact, to the upside. This market's been incredibly, incredibly strong, and I can't remember the last time we had any degree of extreme upside extension on this market. Maybe back in August, really briefly, I'm not going to bother to scroll through the chart to figure it out. But we never had any in September. And that short term tactical that we like to look at, where sometimes in extreme situations, we're like, wow, this could be in the red zone or the green zone for sometimes three full trading sessions in a row. Not that unusual. I can't remember the last time we saw short term tactical close in the red zone even a single time, or in the green zone obviously a single time, but the market hasn't gone down, so why would it ever close in the green zone? So all of a sudden I'm looking at this market like we still couldn't pull back yesterday. The VIX tried again to get above 17 and failed. We're gapping up this morning. We just went from red to green. I was like, is this market actually going to break out? So I did not have the same conviction on the short side as I did this morning, as I did yesterday. It was also a much smaller gap than it was yesterday. So a smaller gap means you have less of advantage. So I didn't love the short off the open this morning. But we did get a weak signal from the Qs on the second 5-minute bar of the day. It broke through yesterday's high and gave a little bit of an upside tail. And I described it in that moment as that. I was like, guys, you could short off the second bar here in the Qs. It might be too early, but you could take that short. The one that gave me a little bit more conviction, though the Qs, which is what I still have up right now, made me nervous, was at 9:55. And what gave me a little bit more conviction there was you had now a potential of a lower high in the spies. So you had the opening high here in the spies from the first 5-minute bar. We pull back, we create a pivot low at 950 into this equilibrium zone. It's just picture perfect bullish technicals, right? Satisfying the upside extension. You shake out the opening low, but it's just a tail down into this equilibrium zone. And now you got this hammer candlestick for upside continuation. And you could go long off that. I think I even called out to the VTF. I was like, guys, if you want to, you could even go long off the second 5-minute candle. And then as this second candle was composing itself before it closed, I began to see the upside tail form in it. And I said out loud, this would be really interesting if this candle actually closes with an upside tail because it could represent a lower high for the market. And then as it began to close that way, I was like, very tentatively again, you could short the market versus the high of this 955 bar. And for the spies, it's a little bit of a lower high on the 5-minute. For the Qs, though, and this is what was taking away my conviction, it's basically an equal high. It looks like we're just pausing before continuation. But then the bar after that, the 10 a.m. bar, actually gave a little bit of downside follow through. And it's like, okay, but this is just a gap fill. So let's be a little bit careful pressing downside, but this is notable. And then we bounced again and we had another upside tail and another lower high. And then all of a sudden, I was saying if we break new lows again, we actually are going into a little bit of a pattern of lower highs and lower lows. Granted, with it's with a market that's sitting at unch on the day, so still could easily be supported and quickly end. But hey, this is a little bit different, right? Lower highs and lower lows in the spies, and it was being kind of led down, I think, a little bit by the Dow. It was being led down a little bit by the IWM. It was not being led down by the Qs, as the Qs are relatively strong, but the Qs were participating a little bit. And then we got the Oracle headline. The Oracle headline came out at 11 o'clock or so this morning, and basically, if I can sum it up, correct me if I'm wrong, this headline came out that Oracle is losing $100 million a quarter on renting out their NVIDIA GPUs. And I mean, that just screams implosion of a bubble to me, if nothing more. And obviously, eventually we saw that the company refuted it a little bit. We saw analysts come out and kind of say, this is known information. It's not a big deal. But I think it was Bill Kay made like a really good point. Not only are they renting out these GPUs and losing money, but the GPUs they get old at a certain point, and you got to upgrade them. So if you can't even make money renting them when they're new, what's going to happen? Are you going to be able to even make your investment back on buying these GPUs? Because then you're going to have to buy new ones. And I mean, it just doesn't seem like the business model works. And we know that Oracle is being so aggressive on AI now that you see all the other companies like a Meta or Amazon or whoever that are spending boatloads of money on AI, but they're doing it with the cash that they're generating from their other businesses. And that's one of the big bull cases that you could still make about what's going on with AI is that these companies, the numbers are crazy, but they can afford it. And Oracle, they're the ones who are like, we're going to go free cash. We're all in. We're so all in. We're going free cash flow negative. And then you can't even make money. Just crazy to me. Really, I don't know what else to say. So they wrecked the stock down on it. And up until that point, by the way, Nvidia was one of the biggest things that was holding up the Nasdaq. When you look at that relative strength of the Nasdaq that I was just reviewing, that was primarily coming from Nvidia. Nvidia was super, super strong. It weakened out a little bit, and then the Oracle headline came out, and honestly, Nvidia never really recovered from that. It never regained its strength. Granted, it held support again, the 184 to 185 zone that it held like 5 times yesterday. It held a few more times again today. So we still are in an environment where it seems like stocks, generally speaking, just cannot break any support levels. The index cannot break any support levels. Nvidia still could not break any support levels, but it never regained its strength after that. And I don't know. I kind of thought that that could be a game changer of a headline, to be totally honest. Like, is this finally starting to blow up in everybody's faces? And I was doing a little bit of research. Was it last night? Last night, the night before, just on some of this AI stuff in general. And look, I am no expert on this, so please take anything I say with a grain of salt. I am absolutely no expert on this, and I don't have a crystal ball. I can't predict the future of industry and the future of the world. But like when you look at that Sora 2 from OpenAI, that is, what everybody's talking about right now. Um, I get it. Like, I'm not gonna, make a case that artificial intelligence is not gonna change the future. It is gonna change the future. And it's already changed my present, right? I use Perplexity for AI searches all the time. I think it's a phenomenal tool. And I still use Google searches as well, but sometimes I do a Google search, and when I don't immediately get the answer that I want, I'm like, why did I Google search this? Clearly, this is not something that you Google search. This is something that you put to AI. So for me, there's still certain things. If it's very simple, I'll probably do a Google search. But if I need any complexity of my answer, I'm using AI. That's me personally. So it's changing my world for sure, and AI is definitely going to be really disruptive. We know that for a lot of different industries. The question is the revenue that's going to come from the disruption enough for the spend that's going in? That's the question. It's not a question of whether or not it's going to be disruptive. It's a question of whether the revenue is enough. And looking at like even my Perplexity uses that I do, they're not making any money off of me that I'm aware of. I'm not a paying subscriber to Perplexity. I'm not getting hit with advertisements that I'm aware of for it. I don't think. I'm not clicking on any links when I go in. I know now OpenAI is trying to do some partnerships with companies where people will go and spend money to just try to generate some revenue, but they are also bleeding money. And when you look at like the Sora 2, obviously the plan there with that is like if you're a movie company to be able to use AI to reduce your costs in certain areas. But really, and I'm sure that that's going to be the thing, but all I'm seeing from Sora 2 is oh man, what's the name of the physicist that passed away who was wheelchair bound? All I'm seeing on repeat is that video of him, um Stephen Hawking. All I'm seeing on online right now is the repeat play over and over again of Stephen Hawking on like the Tony Hawk skateboard or whatever, going back and forth. And I'm looking at that, and I'm like, yeah, and it is disrespectful for sure. And this whole thing with OpenAI about, and I think maybe they changed it. I'm not sure. You have to opt out of them. You have to opt out of them using you instead of opting in. Is a little bit crazy. That screams to me lawsuits. So, OpenAI, if you're listening right now, I opt out. Don't use any of my stuff. I'm opting out. So hopefully I can remember August 7th when they start using my stuff and try to participate in a class action lawsuit or something. But I don't see how this degree of spend, even though it's going to change the world for sure, is really going to be coming back into this form of profit with what they're doing. And I look at that Sora 2 as the next big thing, and it's like, yeah, sure, this will really help the movie studios to be able to save money and hire less people and stuff like that. But is it going to be able to do it at the trillions of dollars of spend? I just don't see it. And then on top of that, when you start to get the circular financing that's been going on recently, and then on top of all of that, you get this Oracle headline that's out this morning, and I'm like, when do these musical chairs stop? When does the market, what's the feedback mechanism here for the AI spending to have to slow down? Is it the companies first because they're realizing that they're not making any revenue, or is it shareholders first realizing, hey, I don't know if I want you because I'm a shareholder spending as much money as you're spending? And the only thing that is somewhat similar to this is Meta on the metaverse, right? Which we've talked about in the past, and that was very clear. Meta on the metaverse, they had to reverse course on that because market participants at a certain point they just weren't having it. But this environment's been the opposite. We are rewarding you for spending. But at a certain point, is there a catalyst that causes that to change? If what I'm saying is to any degree true, um, Pat actually had, it just reminded me right now. I don't know if I can scroll back and find it. It like eight, I think I even wrote it down, unless it was yesterday. It might have been yesterday, unless it was today. Hold on, let me see real quick. Let me see real quick on something that I think Pat posted in the VTF pre-market. Yeah, I made note that he wrote it down at 8:14 this morning. So I'm scrolling all the way up here in the VTF, and this was just one more thing. And this was even before, obviously, the Oracle news hit. But when I read this analyst note or whatever that Pat posted, I was like, oh, that makes perfect sense. Oh, here it is. Pat posted at 8:14 a.m. It's a Gartner study. I don't know who Gartner is, but what they say here is the current supply of agentic AI models, platforms, and products far exceeds demand, which will result in consolidation and market correction. Gartner analysts anticipate that uh, agentic AI markets will consolidate in the short term as hype and fear of missing out give way to fundamental economics. In this AI vendor race, the losers of consolidation will be undifferentiated AI companies and their investors. The winners will be capital rich incumbents with the resources to acquire promising technologies and talent. And I think that actually is a great note, right? This note is not saying that AI is not the future. This is not an ultra bearish note. It's just saying that things are getting a little bit silly right now, and at a certain point, they're going to have to come back to like a more fundamental reality. And in that fundamental reality, you can't just change the name of your company to AI something and go up 4,000% as a result. You actually have to be a differentiated company in some way with what you're doing, and then you're just going to have a handful, like always, of capital rich incumbents that can acquire you as promising tech. But I think that when you go through the market transition to get to this point, that everything sells down. That this bubble, if we want to call it that, that's what everybody's calling it, actually pops. Maybe not in the craziest way either, but it just kind of comes back down to reality a little bit, and you lose the valuation on some of these names to some degree. Even like a Nvidia, even the best ones that are out there, um, the growth slows down to something that's a little bit more reasonable. Even if the PE, stays the same, well, the PE will come down a little bit too if the growth slows down, and then you get pullbacks in these stocks. I don't want to go on too much of a rant here. The bigger picture, though, is I've been of the opinion, and I still am of the opinion that we're in like a tale of two economies or tale of three economies. I know I've said this in the past as well, where it's like there's basically two subsets of stocks that are doing incredibly well right now. It's anything that's related to AI, and it's also anything that's related to like Wall Street bets, right? And then you've got like the real world economy stocks that generally speaking just aren't doing as well in this environment, and a whole ton of economic deterioration that we're seeing underneath the surface. But the economic deterioration that we're seeing underneath the surface, the employment stuff, growth slowdown, all that, um, is in a large way being masked by how well AI is doing. Because AI is causing the stock market to be at all-time highs. And when the stock market is all-time highs, you have a really important effect on the economy of that being the case. It's called a wealth effect. When people see their 401ks are doing well, when they see that their account, their investment account is doing well, they are just more likely to spend money. So you can have a multiple knock-on effect of if this AI bubble implodes, implodes, I still think is the wrong word. I would go back to the note that I just read that Pat posted. I think the right word is corrects, where all of a sudden it's, you got winners and losers, and you can't just say AI and go up 4,000%. And you can't just probably have the same degree of circular financing, and you can't just, like, the Oracle business model right now is a little crazy to me. Um, but, if you get a correction in the AI trade that brings things down 15% in the stock market, you could lose that wealth effect, and then also then has a further negative knock on the regular economy that otherwise is not doing particularly well. So, rant on that over, but going back to Oracle, which kind of triggered that whole rant for me, is so we see the selling come in, we see everybody defend it. At the end of the day here, Oracle didn't barely close down from where it was at all. They started selling this thing at like 291, brought it back up to 285. So it's not it. They rallied this. Maybe they changed their mind and sell it back down tomorrow, but they rallied this thing back too well. And when you look at the spies closed too well. You look at the Qs, they closed too well. And look, we didn't close great. We didn't rip into the close or anything like that. The VIX did close at 17, so maybe something's a little bit notable there. But what I really wanted to see today from a bearish point of view is it's the same question, right? It's the same question that we've been asking. What is the catalyst, right? When crash, like we talk about when crash, we know that the market dynamics are there for when crash, but they've been there for over a month now, and it doesn't mean that it has to happen. The market can continue to trend higher. I think that's exactly what my entire afternoon meeting was about yesterday, right? Respect the trend, but understand when the underlying exist actually occurs. Um, and I kept saying, I don't know what the catalyst could possibly be, right? I think this was just yesterday's afternoon meeting, or maybe it was 2 days ago. I don't know what the catalyst could possibly be at this point. It's not going to be an economic number because the government's closed. And if anything, the government reopening is risk to the upside on this market right now, even though the market never went down from the government closing. The market, in my opinion, could easily go up if they announce tonight that the market is reopened. So it can't be an economic number right now. I don't know what there is on the horizon. There's no gray swans that are out there, right? A gray swan means you can kind of see it coming and you wonder if maybe it has an impact. There's no gray swans out there that I've been able to see coming. But this oracle, when it hit, I couldn't help myself but to say, is this the black swan? Is this the one that I personally didn't see coming? I don't know if anybody saw coming, that all of a sudden they say, hey, this doesn't make any sense here. You're telling me that you are renting out GPU space at a quarterly loss with a depreciating asset that you're going to have to purchase. Did Joby put out an offering? I wanted to short this today and I didn't pull the trigger. I shorted RGTI instead. Of course, I didn't short that one. So I was like, is this the black swan that all of a sudden just wakes everybody up? Like that's like I almost think that's what you need in this market is for people just to wake up at a certain point and go, Oh yeah, maybe these things are a little overly valued based on the circular logic of NVIDIA owns OpenAI, which owns AMD, which owns Oracle, which own, all the circular investment that's ongoing with the business model that's not going as well, that needs to come back down to reality anyway because there's way too much spending going on and too much competition and supply basically compared to the demand for AI right now. What makes that trigger and come together? Because if you get that trigger that causes an AI sell down, then you are getting the systematic triggers and everything else that we've been consistently talking about. So the biggest question for me when Oracle sold down today was, is this the thing? And what I wanted to see today, which I said as the market bounced back midday, was give me a close on lows, ideally like 1% down, but just give me any close on lows and give me a VIX close on highs. And then have that close on lows lead to a gap down tomorrow. Close me at lows, close me down 0.75%, ideally a full percent. Close the VIX at highs, close the VIX at 1750, 1775 today, and then off the close on lows, have the market gap down again tomorrow. And that all of a sudden could be like, oh, things are beginning to snowball and trigger. We're losing a support level for the first time ever. Systematic selling. We finally have enough realized vol to get systematic selling, which, guys, we still didn't have today. Bill K posted the vol chart for the selling, and it's so nasty on the downside. 47 billion or whatever of selling into a 2% down move, 8.5 billion of selling into a 1% down move. Um, but less than like a 0.5% or less doesn't really give you anything, or maybe very, 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 very tiny selling. And at the most, we were down 0.5% today, and we couldn't even close there. So it's just still not enough to actually trigger anything. If anything, the thing that might be closest to triggering though could be a VIX short squeeze, which is like that's why I was like, give me this close on lows and gap down tomorrow with the VIX gapping up that creates the VIX short squeeze. The VIX short squeeze then causes positioning to sell on the equity market that causes enough realized volatility that the whole snowball hits. That's what we've been looking for. And I'm asking myself, could Oracle be it after everything that I was even just thinking about just last night when it came to Sora 2 and all that stuff? And at the end of the day, the answer was no, it's just not enough. Unless something changes overnight here, this was just not enough. Oracle bounced back too much. The SPYs closed down 0.3%. They did not close on lows. And to me, it just seems like not enough. So we'll see what happens tomorrow from a technical analysis perspective on the indexes. We did close a little bit weak today. We did close into the ADMA on the daily, but that's just a technical correction of minor upside extension. That's it. That's all that is. It's a 0.3% pullback, right? 0.3% pullback to the market feel like the end of the world right now. Qs, same deal, moderate upside extension to closing in onto the ADMA on the daily chart. And IWM was a little bit weaker, but it's also just down into the ADMA on the daily chart, a minor pullback from all-time highs. Nothing is broken right now. We did close on lows. Maybe something can become a catalyst that actually triggers. But we kind of continue at the same time to be in the status quo, and I won't be surprised to see us just do the same thing and regrind right back up tomorrow. So, um, you know, who knows? I think that's all. Oh, the only other thing I want to point out, and I'm seeing Jim mention it at the corner of my eye, which is just also a further example of where this market is right now, is all right. So first of all, we just got some secondary offerings. ASTS secondary offering this morning. Gobi just came out with a secondary offering right now. I'm annoyed. I was a hair away from shorting Joby on size at 1950 this morning, earlier today, and I decided I was like, let me be a little conservative still. I'll put on RGTI. I was gonna do both, and I was like, I'll just do the RGTI with a conservative target towards 40. But Joby was the one that I had a lot of success on. But anyway, Joby just announced a secondary offering. ASTS announced it and somehow went green And that's after it was like 4 huge days in a row. The stock went green after a secondary offering today. That's mind blowing. You don't see that in normal markets. I mean, holy hell. Um, it looks like we just got IREN with some sort of offering here after the close that hit this stock down a little bit. Um, it's still only at 59 with the ADMA at 51. I mean, we just are I don't know. So clearly in a bubble to me, but what degree does that bubble have to pop? What does that look like is going to be, the question, and obviously also the timing. So that's all I got. Happy to turn it over to you guys. Um I think the first thing I'm seeing here is from Tate. The two largest single stock ETFs, Tesla and Nvidia, continue to diverge. Oh, ETFs? You just mean single stocks, right? Tesla and Nvidia continue to diverge for a fourth week, but for the first time, it was Tesla leverage ETFs dropping back a negative $0.6 billion in AUM after 2.4 the previous 3 weeks, falling back from their from highs of the year of 9.4 billion, while Nvidia leverage ETFs gained. Yeah, so basically, Paige just giving us a data point on Tesla and Nvidia. This market, I think that one of the best ways to describe this market is extremely bizarre. It's extremely bizarre in many, many ways. One of the ways in which it's been bizarre has just been through the dispersion trade. I've mentioned it a couple times recently, and it really started in 2024 was the only time I had ever seen this happen, and now it's been happening again in 2025. We get these periods of time now where the Qs and the IWM trade literally opposite of one another, even on a 5-minute chart. Um, I've all of my career, I've trained myself to study the market where markets move together, indexes move together, and you are analyzing relative strength and relative weakness. They all go down, they all go up, but which one's going down the most in the down move, which one's going up the most in the up move, that's what you analyze. And then 2024 and 2025 here, these last couple of months, has just been this dispersion rotation period has hit the point, and we understand why, right? It's because realized volatility, the S&P, it can't actually move. So in order for one thing to go down, something else has to go up. That's what has happened. You see this IWM will tick down as Qs are ticking up, and then it's very confusing to me sometimes because I'm like, all right, I think that the IWM is due for an oversold bounce here. So does that mean that you should buy the Qs because they're so relatively strong? Or does it mean that the Qs are going to pull back because the IWM needs to have an oversold bounce? It's been very tricky for me personally to get a good grasp on that because the answer isn't consistent. The answer has not been consistent. Sometimes they then all bounce together. Sometimes then it's exactly that. The Qs pull back so that the IWM can give the oversold bounce. But Tesla and Nvidia, these stocks are very different from one another. I know Tesla's not a car company, but they're very different from one another. Yet they trade complete opposite of one another. It's back to that dispersion. They're both Mag 7 stocks. They're different types of companies. They both have, I guess, some degree of an AI component to it, but they shouldn't be trading so differently from one another that every time Tesla ticks up, Nvidia ticks down. But that's what we've been seeing, and it's been ongoing for weeks. Third place is MSTR. Yeah, and then Tate just even mentioning these leverage ETFs. The leverage ETFs, I think, are part of the problem, if you even want to say it's part of the problem, on why things are even able to trade the way they are. I was chatting offline with a really, really good trader who is a trader at T3. He's part of the team here, but he also kind of runs his own thing. I'm not going to mention his name. And I mentioned RGTI to him, and he mentioned RGTX to me. RGTX is the 2x levered RGTI ETF. Why are there 2x and 3x levered ETFs of every single stock? Even these crazy companies that have never even created revenue have 2x leveraged and 3x leveraged ETFs now. I mean, this, like, who's allowing this to happen? This is a recipe for regular people on the street to lose all their money who don't understand how these products work. And don't get me wrong, I'm a trader, so I kind of like that some of them exist, especially when there's an expensive stock, like a $500 stock, but then there's like a 2x leverage ETF that maybe trades at 50. I'm like, oh, I actually really love that this 2x leverage ETF exists because I can get even higher beta, but use less buying power to be able to trade it. But RGTX is a $300 ETF, while RGTI is a $43 ETF. That's like opposite of what I ever would want to see. And you have it with every single stock now, and it adds to it. Paul Tudor Jones was just talking about this yesterday, that the leverage in the stock market right now is higher than the leverage was in 1999. But like Brant was saying when he was on the radio yesterday, back in 1999, if you wanted to be on leverage, if you wanted to be on margin, you had to pay an interest rate for that. Now it's just like, here's your 2x levered ETF. Have some fun. So you don't even have a cost really to doing that, and that actually enables even further leveraging to come in. But what people also got to remember is that leverage ETFs work in terms of their rebalance in both directions. So I think that the fact that all these leverage ETFs exist has added fuel to the fire of the bubble in AI and the bubble of these meme stocks, especially like this RGTI. Um, but if that bubble implodes when those stocks come down, the fact that these leverage ETFs exist also mean that it will be that much more violent on the downside when things can actually break, if they can actually ever break support levels. So thanks for giving us that information there, Mr. Tate Olson. From Jim, uh, or it just crashes and everyone tries to find the catalyst after that. It certainly could be that also, Jim. That wouldn't be surprising to me. Those are things we see happen all the time too, where the market just kind of implodes under the weight of its own delta or whatever. Charlie McElligott likes to say, or at least these stocks do, and it creates a feedback cycle to the downside. And then after the fact, CNBC and everybody is scrambling to try to find what the reason is. We've seen that for forever and ever and ever. It's one of many reasons why I don't really watch CNBC. From Bill K. Gray swans I've been reading about, the Japan carry trade and France politics and their long bonds. Maybe something after hours when the hedgers are turned off. We can gap somewhere that matters. Having said that, I'm trying to keep long exposure because who knows how long the bubble goes for. Yeah, I couldn't agree more. Uh, Definitely could be an overnight thing. I feel like that's what we saw with Japan in August of 2024. I keep referencing that because I think that it's not impossible for us to see a repeat of that. I think that the market dynamics are in place. But what you're describing here, it echoes also what Paul Tudor Jones was saying yesterday when he said that the biggest upside gains in the stock market are always on the last leg of a bubble. And if you're not participating in that bubble, that last leg, you missed out on huge performance. But I think the term that Paul Tudor Jones used was having happy feet. You got to make sure you got your happy feet because when that turns the other way, you got to get out of the way. And who knows where we are actually in it, it could continue, uh, but that's why I feel like that Oracle news was so interesting today because it's like, is this it? Is this it? And it's not. From Varun, was there enough for Musk's Tesla to push through 420 spot 69? Uh, I don't know. Tesla does not look good to me. 420 is a hugely important level for Tesla, actually. It's where it held a couple days ago. We call it the long into that area, but really weak again today. So Tesla does not look good to me, but it doesn't look bad either, honestly, as long as it doesn't hold above as long as it doesn't lose 420. Starts to lose 420, I think it's got problems. Looks like we've got Jensen Huang coming out and defending Oracle now as well. Concerns over Oracle's reported thin margins on its AI cloud business. I mean, I'm a big fan of Jensen Huang, but the guy clearly is motivated to say the things to defend Oracle here, and defend the entire AI trade. It's got a lot riding on it. Um, when you first ramp up a new technology, there's every possibility that you might not make money in the beginning, but over the life of the system, they'll be wonderfully profitable. Yeah, I just don't know that Oracle business from what we saw. I don't understand. How could they be losing money renting that out? What Oracle does with NVIDIA systems is not easy. You've got to build infrastructure. It's got power. It's got cooling, and then you have to operate these things, and then the chips will be old. We got the Iron Condor guy back. Uh, 4 red Q closes in a row today, which I also find kind of interesting. Yeah, well, it's gap up, close weaker, right? Like every morning we've been gapping up but not closing on highs, so it creates the red daily bars, even though the market itself has overall continued to move up. Um, so sometimes that's a sign of distribution. Can I get that selling to come in after we don't gap up though? Like every day, instead of my swing shorts being super out of the money, and then me managing the trades all day, and getting back to flat, and then hopefully getting to positive. Could I just get it where it starts in my favor and then the selling comes in? Probably not, right? All right, let's check the YouTube and see what's going on over with the YouTube, which I didn't even log into yet. So let me see. I'm not seeing. Oh, there it is. From Cyril. I was going to go long, but then the ADMA failed and below opening pivot, so long trade was over. I switched to short. Great short up setup was at 1120 retracement for a failure into a leg two. 1120 retracement for a failure into a leg two. Yeah, that was a great spot actually. You get the big selling that comes in with the Oracle news, even at the market level, snap back to the ADMA on the 5 minute, upside tail into it. If Scotty is listening, Scotty was asking me, we were talking about RGTI, but how to press downside, like what you look for. And this is not an ideal example, but it's generally what you look for. It's that after the market gives its leg down, you're looking to short the lower high. The lower high should be in the equilibrium zone, space between the 8 and 21 EMA, and you get a signal with an upside tail that you short versus for continuation. Um, Cyril saying for coding AI is a game changer right now and getting better every month. Again, I totally agree. I don't know how to code, but I know enough people who do. They tell me it's a game changer. I'm not saying that AI is not a game changer. It is in so many ways. Coding to the way that commercials are going to be done, the way that movies are going to be done, the way that taxi drivers are going to drive, everything. Huge game changer. The question isn't, is AI a game changer? It is the value that's going to come from what AI is being a game changer for worth the amount of spend that's been coming into it? And when I look at Sora 2 and when I look at that Oracle headline, to me, the answer to that is no. We're talking about trillions with a T of dollars of spend on AI right now. What is my game plan for the Qs tomorrow? I don't have one. I'll have it tomorrow. I always make my game plans in the morning. I like to see how we gap because there's so much information in the gap that is part of how I develop and build my game plan. That I always need to properly assess that in the morning. I feel like if I try to give you a game plan right now, I'm just giving it to you without the right information. Gartner might be the IT research firm. Sounds right. Sounds right. Yeah, again, Cyril was saying in the YouTube, it felt like a big, day 1% down day today, right? And I remember 2 weeks ago when I was in Chicago and the market went down 0.5%, it felt like the sky was falling. Yet the market goes up 0.5% on a gap almost every day. It goes up 0.5% in a blink of an eye. But when we go down 0.3%, we go down 0.5%. It's like, oh my gosh, this big sell off. Don't get comfortable with 0.3% down being a big sell off in your mind. Because if you do, when things actually trigger, you're going to buy the dip way too early and you're going to get hurt. Recognize that if this stuff ever were to trigger, it can trigger really big on the downside. You can get, multiple 2% down days in a row that really wash out that positioning. And then eventually we're looking at a market that's got $18 of extension to the downside from the ADMA on the daily chart on day 4. And then we say, all right, now is the time to buy. Now is the time to come in and buy the dip. Steven on Poet. I saw it had a big day one today. I saw that bullish option flow went off on it. Otherwise, I didn't really look at it. Great day one today. If you're already long it, ride the wave. Why not? But if you're not in it already, you missed it. So you need to already be in it. And if you are, I would just go with the usual. Come in proud. Looks like it could continue. Um, Liam asking me about Quad U in the VTF. This Quad U keeps failing at 18. It's another big tail. Every time it gets towards that 18 area, they tail it down. So there's big resistance up there. It reminds me a little bit of, I think there was another level on this where it was doing something similar. It might have been this 10. Yeah, it was 10. It looks like nothing now in hindsight. But I remember this 10 had a big seller in it, and there was one, two, three, four, like five, six occasions of this thing getting above 10 and then failing right back down because of the big seller. This looks like that to me as well. This looks like a short to me right now, not a long. Um, Especially after today. Like today's the day it really should have went. The first couple times it got up there was way too extended, but now it was not nearly as extended. It should have been able to break and continue today, and it was not able to. So to me, this looks like a short versus that 18 area. I just don't know what the right stop loss is for you. All right, folks. Looks like I got through everything. It's almost 5 o'clock here in New York. Have a great night. We'll see how much we gap up tomorrow.